So look at this. When the Fed was created in 1913, $100, this $100 bill that I'm holding, $100 was worth $100. Imagine that. That just seems logical, right? Fast forward to 2019. That same $100 and the buying power of that $100 is now $3.87. And that was 2019, prior to the pandemic. Now, they printed almost $5 trillion during the pandemic. So what do you think your dollars or your $100 bill's purchasing power is? Well, the answer is less than $3.87 by history. So when you look at inflation, inflation is nothing more than a hidden tax if you really think about it. And many of you are brought to believe, because of the media and the false lies you're told, you are brought to believe that the government actually cares that inflation's going up. They want you to think that, but they don't. They want inflation to go up, because if you had debt valued at $100, okay, if you had debt that all your money was, your debts were valued at $100 in increments. So just take every single dollar was actually worth $1, and that's how your debt was created. But then imagine that dollar or $100 bill is now only worth $3.87. Wouldn't you love to pay back $100 with $3.87? Of course you would. All of you would pay all your debt off if you could pay every $100 of debt off with only $3.87. Does that make sense? Because that's what the government does. The government devalues your dollar by printing more of it. And the Fed is largely part of this, because the Fed thrives and survives on protecting the dollar and creating more debt. Because as they create more debt, okay, as the US government prints more treasury bonds, they then circulate those in the worldwide economy. China, Japan, all of them want US treasuries and they buy them. And then when they come due 10 years or 30 years, whether depending on which bond the country buys, let's just pick on China, when those bonds come due and they trade them in, let's just say those bonds were sold in, let's just say 1983. I'm just picking a bond. 1983, China bought a whole bunch of 30-year bonds. The dollar, $100, was valued at $9.94. That was the purchasing power of $100. Today, if China turned those bonds in, the U.S. government could pay them back at a value of every $100 of only $3.87. It's the exact same thing. If you could pay every $100 of debt back at $3.87, you would love that. Therefore, the government loves inflation. So they will continue to print money. And the Fed will continue to aid them printing money because it is self-serving. And all of this printing results in what you see today, which is one of the biggest bubbles, speculative markets in history, only rivaled by the Great Depression bubble, 1929. But everybody's watching the markets today and they're saying, yeah, but Chris, even with the Russia-Ukraine war, the market's been doing okay. I'm making money. Well, of course it is. As long as they can print money, as long as they can keep playing this little thing, they will continue to manipulate the markets. Do you truly believe that when the Russia-Ukraine war started and the markets were down 800 points, but then they finished up 80 points? Do you really believe that's because of real things? Do you really believe that that is not market manipulation? Because it is. Wake up, folks. This is one of the biggest games of smoke and mirrors, or whatever you want to call it. It is the biggest illusion in history. And you're part of the game. And you are also going to be the one that is going to lose if you don't pay attention and start taking action. Because we are in a super bubble, one of the few in history, where the stock market is at all-time highs and crazy valuations. Nothing seems to make sense. And it doesn't matter what index you look at. All of you that love, indexing. Oh my God, I hear this every freaking day and I just want to rip my hair out. Oh, I invest in the index. What index? Oh, I don't know. People don't even know what index they invest in. There isn't just one index. There's the NASDAQ, there's the Russell, there's the S&P, there's the Dow. Which index are you investing in? Oh, I'm sorry, you don't know, because some jackass told you to invest in the index because the index over history has always made money. Which is true. But you wouldn't probably hang on to that fragile amazing index investment that you bought that you don't even understand, you wouldn't hang on to that if it dropped 30%, 40%, 50%, because you wouldn't be able to. Because when the market tanks, what else happens? People lose jobs. People get laid off. The value of their house goes down. The value of their 401k goes down. The value of their portfolio goes down. And when everything goes down, you don't feel so rich anymore. That's what happens, folks. And when you don't feel so rich anymore, or you're not rich anymore because all your money just evaporated overnight, and you're sitting there saying, oh my God, what happened? The same thing that has happened every other time in history happened, and it will happen again and again and again. So the super bubble is real, and you are caught up in it. And when people ask me, well, yeah, this is great, but what should I do? I tell them it's very simple. Sell. Find a safe place to move your assets. If you love taking risk, then move your assets outside the United States. Look at international markets. Invest safely. Reduce the amount that you have in equities. Reduce the amount you have in risky assets. Change your strategies from a short-term strategy, or what we call get rich quick strategy, to a long-term strategy when it comes to real estate. Because if you're playing the short game in real estate, you're going to lose. But if you're playing the long game and you truly have the capital to play the long game, you could win, but it's going to take you a decade to get back where you're at. Don't believe me? Look at any other period, folks. If you bought a house in 2006 and 7, it took almost a decade to get the value of that house back, maybe even longer in certain parts of the country. Some people right now are still upside down from the houses that they bought in 2006 and 7, literally. So if those people are upside down in the markets at an all-time high, what does that tell you? Well, that tells you that back in 2006 and 7, we were also in a bubble, and it deflated, just like this market bubble will deflate. And when it does, which could be very soon, because you're seeing a lot of signs right now, you're seeing all this, the telltale weaknesses that the market is ready to collapse. You're seeing things that don't make logical sense. You're seeing things happen in the markets that even the best of the best out there can't explain, and they just chalk it up to say we are at the end of a cycle. Things won't make sense until they all do. And what they mean by that is when they all do means when the market collapses. Folks, super bubbles can't last forever. They won't last forever. I can't tell you when and how or what's going to trigger this bubble, what's going to be the pin that pops the bubble. But I can tell you one thing with utmost certainty. It's coming. It's coming, and it's going to be bad. If you ask some of the utmost expert economists or hedge fund managers that have been in the game for a long time, when you watch their videos, you're like, wow, that guy's old. Yeah, he's wise. He's seen this before. When you watch them, they're all saying the same thing. They're saying this bubble's going to pop, unless they have some equitable reason to not say that, and they're just lying at that point. They all know. They know because of history and because of science. And because this event that we're in right now has happened to some extent somewhere else in history. Some of it looks very similar to 2006 and 7. Some of it looks incredibly similar to the dot-com crash. Some of it looks incredibly similar to the inflationary problems we had in the late 70s and early 80s. And I will tell you, the whole thing looks awfully similar to what we saw in the roaring 20s leading up to 1929. And the funny thing is, everybody keeps saying, yeah, but it keeps bouncing. The market keeps bouncing. Well, guess what? 1929, what is it that all of you know happened that year? That's right. That's the year the Great Depression started. But you realize that that year, the market had lots of rallies. The market would drop and then rally back up just like it is today. Exactly the same. And it was exactly the same in terms of why, because it was manipulation. Back then, it might have been the big bankers because they had all the money. The government wasn't doing what they're doing today because they didn't have the printing press in full steam. They hadn't figured that thing out, but they did print a lot of money. They did create a lot of debt. But that was also coupled in 1929 with big bankers dumping hordes of money into the markets to control it and manipulate it. And when they controlled and manipulated the markets, eventually that too came to an end. So what do? Well, if the Fed's number one job is to protect their greatest product, the dollar, well then don't try to beat that. If the dollar is the greatest product on earth, understand that and then follow the big money. And I will tell you right now that the typical investment strategy that an advisor like what I used to be would be 60-40, 60% equities, 40% bonds. That model is gone because bonds are overpriced today. Equities are overpriced today. Even real estate's overpriced today. So where do you hide? Well, that's the tricky part. And I've got lots of other videos on this YouTube channel that tell you exactly where to go. But I simply want you to understand a couple things. The US dollar is the dollar used to trade crude oil. The US dollar and the Federal Reserve's job is to protect that dollar. Okay, I'm just reading some notes here. It is the best-selling product on earth. Everybody wants this. So this is the almighty. This is not trash. The dollar is not trash. You just are being brought to believe that it is because of inflation. But inflation will then give way to deflation. And deflation will benefit all of those who are ready for it, but it will harm all of those that thought cash is trash and that moved all their cash into risky assets like stocks and indexes and IULs and all these other things that everybody holds so near and dear because, oh my God, last year I made money, the year before I made money. Folks, you are living, or actually, let me rephrase that. You are driving your car, looking in the rearview mirror. Look out the front windshield because there's a big wall that you're about to hit. And the only reason you're about to hit that wall is not because you're not a good driver, but it's because you're driving, staring in the rearview mirror, the same way you are investing, staring in the rearview mirror. Look out the front windshield investing, and you will see the wall that you're about to hit. It's right there. It's not even hidden anymore. It's right out in the open. You can see it coming, but you're so busy and so caught up in that rear view mirror in past performance.